If you ever looked at a stock and thought to yourself, this share price is too expensive, this video is for you. Today, shares of Micron are trading at $986. ASML is $1,783. Costco, $921. And even a fund like VOO, the Vanguard S&P 500 ETF, is nearly $700. I was in this situation years ago when I wanted to start incorporating investments like Google into my portfolio. It was trading around $3,000. Amazon was over $3,000. My very first time investing into it, it was $3,391. And even Tesla was $900 to $1,000 when I made my first few investments. Yes, I could have waited because in time, all of those companies had a stock split, but I didn't. I bought anyways. I got started when I had an understanding of the fundamentals and I made the decision that I wanted this in my portfolio. And now my investment into Google is up about 152%. I'm up about 73% on Tesla and 59% when it comes to Amazon. You don't have to wait. You don't have to be held back because of a share price. That's not a reason to miss out of years of compounding. When it comes to my investing journey, fractional shares has changed the way that I invest forever. One of the biggest investment lessons that I learned came from being a part of the right communities like KGU, which I've been a part of for many years now. This is something that was reinforced. The share price should never hold you back from holding great businesses. So once I knew what I wanted based on the fundamentals, not the share price, I moved forward with adding those investments that seemed too expensive. I simply bought what I can afford. You can see in this screenshot here of my Amazon investments, $25, $5, $100, $10. At a $3,000 share price, I was not jumping in and buying a full share, just adding to my position little by little. In time, allowing me to build up to this 27 shares. I'm glad I got started when I did. These are positions that I knew I'd be holding on for years to come. So here's something that I want every newer investor to understand. A share split does not make a company cheaper. Imagine a cake sliced into 8 pieces or 16 pieces. You still have the same exact cake. That's exactly what happens a stock split. And back in 2022, when it comes to Google, for example, they did a 20-for-1 stock split. The value of the business didn't change, only the number of shares. The reason that companies do this, split their stock, is usually because management wants the shares to become more affordable for the retail investors that could be held back by seeing those share prices in the thousands. It also improves liquidity, but it doesn't make the business a better investment. So, like I said, I'm glad that I didn't wait for months, potentially years, for a share split announcement. When it comes to Google, they hadn't done one prior to the 2022 split since 2014. Meanwhile, their share price was growing during those years between 2014 and 2022. So every brokerage that I hold a portfolio on right now allows me to invest using fractional shares. Fidelity and Webull as low as $1, and then at $5. That means I can just keep on plugging away, investing what I have available to me, not being held back by the price of a stock ETF that I want to have exposure to in my portfolio. It depends on whatever fits my budget. As long as I'm invested, I have ownership. And even if it's a partial share, I'm going to get that percentage growth. But don't be hung up on having full shares. You can work your way up to that. So nothing I ever share here is a suggestion for what you should buy, hold, or sell when it comes to your portfolio. I just chose these investments as things that might have been on your radar, but giving you that feeling of, I can't afford it. ASML is having their earnings coming up tomorrow on Wednesday, the 15th of July. This is a company that continues to benefit when it comes to its dominant position in advanced chip making equipment used across the AI industry. So it's an investment that's going to be subject to that semiconductor volatility, but it is a strong competitor when it comes to this type of technology. Micron is another semiconductor stock that has strong AI-driven demand for its high bandwidth memory. These are two companies that you can get exposure to through investments like SMH. Micron holds the fifth position at about 5%, and ASML holds the seventh position at also around 5%. So you can go with the ETF and add in additional exposure to some of those top 10 names. Find the right fit when it comes to your portfolio. Costco is another one that came to mind to use as an example because I've been hearing for years that this share price is high, but it's a name that we know. It continues to grow through its membership revenue, opening new warehouses, and generating consistent cash flow. And then, of course, an S&P 500 investment like VOO. Vanguard recently had some share splits when it comes to VUG and VGT, which had a share price similar to VOO prior to the split at about $708. 8-for-1 split brung it down to less than 100. The focus should not be on that share price. It should be on getting invested, building and growing, allowing your money to compound. It didn't take very long for those share splits to come along when it came to the investments that I shared that I've incorporated into my portfolio, like Amazon, Google, and Tesla. But when it comes to Costco, they haven't had one for 26 years. Micron hasn't split since the year 2000. So this is a reminder that your investing strategy should not be dependent on when management decides that it's time for a share split. This could leave you sitting on the sidelines for months, years, even decades. So just get started. Our goal is to build wealth, have ownership. So I'll be holding on to my Tesla shares because I believe the long-term future growth of this company. I'll be holding on to my Google because they've been investing aggressively into AI, implementing Gemini into different products. They have their Waymo autonomous vehicles. They're on track to remain one of the strongest cash-generating companies in the world. And Amazon, I'm holding on there too because they've been pouring billions into AWS, Amazon Web Services, their AI infrastructure, committing to focusing on a long-term commitment when it comes to cloud computing and AI. And of course, we know Amazon for their e-commerce, their subscription services through Amazon Prime, and they're working to expand and improve when it comes to faster delivery, expansion into groceries and everyday essentials, even drone delivery, and Amazon Pharmacy. Some of my investments are more volatile than other, like Tesla, for example, but I have the stability of my ETFs and mutual funds. So I can give investments like that the time to grow and see where Tesla goes with their development into their autonomous driving vehicles, Optimus robots, and other AI initiatives. So I've invested and now I'm being patient when it comes to these quality stocks as well as ETFs that I've incorporated into my portfolio. VOO is another one that I hold, and I'm up currently about 57%. And it's another one that share price is significantly more today than when I got started back when it was around $300. So today's message is don't let any share price hold you back from quality investments. If you've done your research, believe in the company, have a understanding, it fits your investment strategy. Don't wait. Start today with whatever you have that you can allow to remain invested for the long term. Whatever it is, $5, $10, $25, commit to whatever fits in your budget. Set aside that $100 per paycheck. Incorporate dollar cost averaging, buying those fractional shares, and in time, your portfolio will be doing the heavy lifting for you. Leave me some comments, share in the chat. Are there any quote unquote expensive stocks that you've been watching and hoping for a share split? Starting matters more than starting big. Consistency beats timing the market. Take some time to check out some more of my videos. Put on that notification bell so you can keep up with my videos and live streams. And make sure to subscribe, like, and hype. Thanks for watching. Okay, bye.